right. Welcome to another instance of Cash Flow Talks. Today's title is, and you may have gotten a webinar or an email that said last month's title. So that's on us. It's not what we talked about last month. It is actually, and I have it here in front of me somewhere. What is it called? Matt, you sent it to me before. Matt, well, Mike, you would know. What's your session
We're
called?
going to talk about AR, right? We're going to talk about the process of collecting money.
There we go. We like to collect some money. But before we collect money, let's talk about if you had one place you could go, it's question of the day. Last place you could visit. No more trips after this. Where would you go?
Oh, I'm thinking, you want to say an island, but then you're stuck there.
Right. And I didn't say how long the trip could last. Maybe you're like, well, okay, I'm going on a 5-year world tour. But
Oh, got it. You said it was the last place you would go. Like, oh,
last
that
place you'd go.
was
Well, that's the intention is you got one spot. Where would you go?
dude, I tell you what, I'm a beach guy, so it's got to be somewhere on a beach, and Aruba has the best beaches.
Oh, well, there we go. I was thinking maybe the Galapagos would be kind of cool.
That would be
Go see
cool,
the
right?
Galapagos Islands. Yeah.
Yeah. I mean, did you ever hear that? What was it? Steve Irwin actually owned the same turtle as Charles Darwin.
What?
Yeah,
No.
check. Look at the turtle's name is Harriet, and it was originally owned by as a pet by Charles Darwin,
Okay.
and it ended up being the pet of Steve Irwin. It lived
That's
that long,
crazy.
175 years or something like that.
Is that like a land tortoise or something?
Yeah, I mean one of those massive ones. I mean that
Yeah.
you can ride on.
That's insane.
Yeah,
That
that's
is
a
insane.
fun fact for the day, right? Fun fact
There
for
we
the
go. That's right. That's a good one for a Friday. All right. So before I turn this over to Mike, a couple of housekeeping items. It's only 30-minute sessions. They're, plus or minus. So there's no CPE. If you have any questions, drop them in the chat or the Q&A, whichever one is live. And be specific when you ask a question. Don't just say, "What do you mean by that, Mike?" Say, "Mike, what did you mean by he owned the tortoise?" Just be real specific because he may not be able to answer the question when you ask it. And then lastly, we do have our premium content offering that we do. It's called Be Insightful. Be Insightful is 9 different training tracks that we have webinars throughout the year. Then we also have workshops following each of those webinars, as well as just custom premium content that's available only to members. Matt, if you could post that poll, that would be great. Maybe you have, and I just haven't seen it. But just let us know if you have interest in that. It is $1 for the first month, $49 a month after that. And you can see in front of you there 9 tracks. We've got Coach's Corner, App Comparison, Tech Stack, Your Tax Practice, Your Firm Accelerated, which is about business development, practical automations, niche marketing, human resources, and then migrations. And that's our speaker lineup. We do have a couple others that we've got one we're throwing out there. I think it's in May. It'll be a new one, but he's just kind of popping in, doing a one-off. But if you want some information on that, let us know and we will get it over to you. Cashflow Mike, thank you, sir, for being here. And it is all yours, my friend.
There we go. This is always my favorite part, man. Working with you. It's always one of my favorite things. So thank you.
And I'm gonna have to send you something now.
You're gonna
Send you
send me
some
something.
gear. Have to send
Oh
you
yeah,
some
yeah,
gear. You
yeah.
got
That's right. Yeah, because I'm only repping me today.
exactly right. So,
There you go. There you
all
go.
right. Thanks for being here.
All righty, thank you. Hey, live from San Antonio, it's Cashflow Mike, right? And I tell you, this is one of those things I begged Gary to let me do. Is like, oh, hey, just let me come on 30 minutes a month, talk about cash flow, talk about some issues. But I always come at it from I'd like to come at it from a different angle. So instead of, if you ever do a Google search on cash flow, whatever, you come up in the first 50 pages, it's all like the same 10 things they tell you to do. Well, I like to stretch that a little bit. I like to kind of stretch it out into thinking outside the box on how we can do certain things. So today I'm going to talk about accounts receivable. And let me pop that open for you. Right up here, I think the handouts have went out already. And we'll get started. All right, so the reason I'm doing this, right? Everybody has a mission. Everybody has something that they're trying to do. The reason I do it is that I want to eliminate cash flow as a reason that businesses fail, right? Period. I want you to fail for other reasons. I want you to fail because whatever, but don't fail because of cash flow that you run out of money. So Part of that is that there's 18,000 businesses that file bankruptcies per year, and 35% of them have profit, right? That's what the problem is for me, is that how do you have profit on paper, but no money in the bank? So if you've ever heard your clients say that, that's exactly the type of things that I teach my clients that come through the Clear Path to Cash program, and give you the strategies in order to avoid that. So what is this problem we're talking about? Is there a such thing as growing broke? Can you do that? Can you be so successful that you run out of money? Right. So that's what the question I always ask. And people get confused at first. They're like going, well, maybe, maybe not. I don't understand how you could. Well, you can. Right. And the story I always tell, and I like this story because it's the one that I think always kind of hits home. But I had a friend, his name is Alden Mills, right? And Alden Mills retired from the Navy and he built a product, right? And he built a product. That's what he was going to do after he retired. He was going to be kind of in fitness, and he built a fitness product. And the product that he built was this thing called the Body Rev, right? And the Body Rev, if you look at it, right, look, you can't even find it anymore. This was like the early 2000s. The only picture I could find that was decent was one that was beat up on eBay. That's the closest I can get to a Body Rev right now. But the Body Rev was a combination of resistance and aerobic activity, right? You'd hold these two handles and you kind of move it around, and he had kind of a routine and different things you could do with it. And he raised $1.2 million from the three F's, right? Friends, family, and fools. Right? Not fools because they're foolish. It's just that, they believe in him, and they'll do what he wants to do. Well, this product, right, was everywhere. It was on the Home Shopping Network. It was on QVC. He did his own infomercials, and I think three people bought this thing at 3 o'clock in the morning. That's what the only time he could sell it. Apparently, it was 3 o'clock in the morning. He sold three, and he burnt like $1 million in about a year, just producing, designing, and promoting this product. Well, when he was down to about $125,000 or so, he says, I'm going to pivot the company. And if you know anything about pivoting a company, right, that's when you believe in something core. For him, the core thing was aerobic and resistance activity. That's what these handles were. Oh, look at that. That's cool. I guess I get gestures today. But when you believe in something, you just reintroduce it to the market a different way. So he took these two handles out of the middle, right? He's down to his last hundred and some $1,000, took those two handles out of the middle and put them on these two circular discs. And when he did that, he renamed the product from Body Rev to a better name, right? And he created this product called the Perfect Push-Up. Originally, it was called the Body Rev, that he rebranded it. Like, I bet you've never seen the Perfect Push-Up with the Body Rev brand on it, but that's what he did. We all know it as the Perfect Push-Up, and this thing took off like crazy. $2 million in sales the first year, $60 million in sales the second year, and he almost lost the company. How do you lose the company if you're doing $60 million a year and it's just taken off? Well, everybody that has a product, their dream is to put it on the shelf somewhere, right? Costco, Walmart, Target, any of these things. Well, he got it on all of them. He even got it on the as seen on TV promotions. Well, what happens when you get these large contracts is that now all of a sudden you've got to buy all the material, produce all these goods, put them in a box, merchandise them, package them, send them out, and then hope they sell. Well, in his case, they did sell. They sold a lot. And we'll say they sold 100,000 the first week. Walmart turns around and orders 200,000 the next week. So he's constantly filling these orders. Well, think about what happens in this company week after week. You got payroll, you got rent, you got suppliers you're paying, you got just the delivery out to all these stores or distribution centers. All this cash is going out to maintain operations, and with every order he sends an invoice, and this invoice goes to Walmart or Target or Costco, and it sits on somebody's desk in the AP department, and it sits there for 2, 3, sometimes 4 months. Think of all the payrolls that he had to make. Think of the rent. Think of the materials. Think of all this cash that goes out before he got paid for the first one. That difference between all the money going out and getting paid from that first order is called the financial gap. So the financial gap is what every company needs to manage. So I teach the calculation, and it's different for a service company than it is for an inventory-based company. But this gap, if you're thinking gap in your mind, like a big long gap, Think about how hard it is to jump over a big gap versus a small gap. Well, that's the same thing in your business. The smaller this gap is in your business, the less money it takes to run it, and it runs smoother. Well, he let the gap get too large, right? And ran out of money. So let's talk about that just a little bit more. So, this financial gap is all about money coming in, right? So, he's got inventory that sits on the shelf, but then he's also waiting to get paid. At that same time, he's paying all his bills, right? And the difference between money coming in and money coming out is called the financial gap, right? And then, of course, you're going to add on however long it took you to actually sell it to begin with. So that's the concept that I try to teach people, is that the smaller this gap is, the less money it takes. And when you use working capital as a term and you throw it out there with all your clients and they go, oh, working capital, you got working capital. They don't understand what you're talking about. But working capital is simply this: it's the amount of money you have, right? It doesn't tell you how much you need, it just tells you how much you have, right? So that's where we're at to begin with. That's the foundation I'm trying to lay. So our thing is to make this gap shorter, we've got to reduce the space, right? So we can collect faster. That's one way to make it shorter, or we can pay slower. That's where it comes up with all these things. Well, I can collect faster or pay shorter. And what happens is the gap gets smaller. I have money coming in faster and I'm keeping it in the company longer, which makes the gap smaller. Working capital is designed to cover that gap. So that's the first kind of concept that we're going to teach today, is understanding this gap. Well, what do I do? Like I said in the very beginning, you could go out and do a Google search for all this type of stuff, and you're going to come up with the same old tired strategies. I've done Google searches on this, and it's about the same 10 things you hear people. Oh, send your invoices promptly, offer multiple payment options, use online invoicing. You feel like you're in a rut, right? That's what I'm talking about. These work, don't get me wrong, but they're not exciting. They don't drive action. And everything I do, especially like in my new book, Don't Tell Me What to Do, it's getting people to take action. So if you haven't seen this, this is 8 conversation techniques to get people from being compliant, just doing what they're told, to being committed to taking an action. So that's basically what we're trying to do, is get somebody excited to want to do something so that you can work side by side with them to get quick wins. So here's some ideas that I've thought about right over the last year or so. Here's 5 different ideas for thinking outside the box. Don't get me wrong, the ones I just showed you are all good. But do they excite your client? Do they excite your client's customers? So that's what I'm trying to do, is how do I get other people to take action? I'm big on the psychology of things. I even told somebody in a call yesterday that even the parking lot in Walmart is designed for the shopper, the psychology of the shopper. Did you guys know that? The parking lot, the size of the lamp post, the size of all the posts, the signage on the door is designed to make it look closer than it actually is. Because think about it. If you've ever parked out in the back 40 of a Walmart parking lot and had to walk, it's a long way. It just doesn't feel like it, right? Because it's wide open. And the size of things make it seem and appear closer than it is. Kind of like Las Vegas. You're like, oh, we'll just walk over there. And like 2 days later, you get there. Well, think about that same distance if you were in a city parking lot, just a city street, and there's skyscrapers and big buildings all around you, and you got to park 5 blocks away. If you got to park 5 blocks away, that same distance seems like forever, and you're like going, I'm not doing it. That's too far. So the psychology of things really excites me, about how they design places to be able to make it seem not as painful. All right, so here's 5 things that I want to talk about today, right? One is having a personalized payment challenge to the person, right? To the individual customer, getting them excited to do things. How about an early payment discount allocation, letting them choose what to do with their discount? Or reverse payment fees, right? Where you give them the discount up front, and then every day that they wait to make payment, that discount reduces, right? Down to 0. Or you've got pay it forward campaigns. Some people, like to promote their causes and like to understand that, hey, maybe my discount can go to something else, something better. even another customer that's struggling, right? You see that all the time in like electricity bills or utility bills where I can pay it forward and help somebody else that's struggling to have heat or electricity. I can help pay it forward. And then mystery discounts is, hey, you don't know what you're going to get, right? I mean, all of us probably have clicked on something like this, a spinning wheel just to see what our discount is. And it's always the best one. So let's talk about these things, right? This personal payment challenge. Now, what is that? It's client specific, right? So if they're late payers, we challenge them to pay on time and incentivize them to pay on time. But these are personalized to that person. Not every person is a late payer. All right. You got custom rewards, right? Just by talking to folks, you say, yeah, that'd be great. I'm a big Cardinals fan, St. Louis Cardinals. And maybe you can get tickets to a game for that person. Hey, if we can get your average time to pay down to, 15 days, I'll give you a set of Cardinals tickets, things like that to incentivize them. That's motivating the person as an individual, right? So that's kind of what we're talking about when you personalize your payment options is what can I get this person to do to take action that really excites him or her? The next one is kind of one of my favorites, by the way. It's the early payment discount allocation, and this just lets uh, people use a discount code for what they want. Right? Do I want 10% off just for a regular payment? Do I want 20% off for something more valuable or something bigger or more substantial purchase, or 30% off on high value or special occasion stuff? I can use my discount when I don't have to use it on that specific invoice. I can save it for later, and the higher the ticket, the more I can save on it. So that's kind of what we're talking about when we say early payment discount allocation is they get to choose, and this should be in your handout, right? So we don't have to go through and read it to you, but the individual gets to choose what they want to do with it and when they want to use it. That's the discount allocation. This one here is kind of exciting to me as well, right? Reverse payment fees. Because again, where some people are incentivized by saying, oh, well, if I pay early, I get a discount. This incentivizes them to pay early because every day costs them more money. When we say time is money, this is the true reflection of that. That every day that goes by, the discount decreases, right? So if you get them within, yeah. So Carrie, where do I get the handouts? Matt, can you help out and post the handouts for everyone that I'd sent you earlier? Appreciate it, buddy. All right. So again, these are in there, and I want to make sure everybody's got it. If not, I will add it at the end if Matt doesn't get it. So at the end, I will go grab it and put it in chat for everybody. All right. So with that, right, I like the fact that time it's like a ticking time bomb. The longer it goes, I have to do it before the end of the discount period. So you're incentivizing and encouraging them, and it's like a light psychological push, right? Because everybody doesn't want to miss out. People don't want to miss out on things. So that's kind of how that works. Oh, there it is. Matt got it posted. Good. Thanks, Matt. The other thing is like paying it forward, right? So you can select the business partner or charity that aligns with your values. And sometimes, so I've seen larger companies partner with smaller companies and say, hey, if they struggle this month, take a portion of my discount and apply it to theirs, right? So you can actually partner with other companies. You can take the discount and apply it towards a charity or something like that. Like, hey, we're going to help out. And, I'm just pulling one out of the sky, but Wounded Warriors, right? I'm a veteran-owned business here in Texas, and that could be one of the things that we provide, housing or provide assistance for veterans. I mean, if that kind of was one that tugged your heartstring. I also have a French bulldog, and I love all the dog videos. So if you guys ever see dog videos, send them my way because they're the funniest thing. If you never watched a dog video and laughed, you're missing out on life. One of the great things in life. All right, so I like this because it gives you something more than $1 to think about. It gives you something bigger than you to think about. So I like that one. And then mystery discounts. This is kind of one I threw in there, right? Just to see what you thought about it. If you hate it, tell me in the chat. But if you like it, it's fine. But it's like it's a surprise. Like we don't know what it is. Once you pay, then I tell you what your discount is, right? So, and you can do this through a variety of ways. There's random number generators. There's things like that where somebody could push a button on your website. Or you could send them just a random number and they look it up on a chart what that random number is and they get a discount that's applied in future purchases. Or if you're tech savvy, you can do that even up front. Let somebody push a button and surprise, this is what you get this week. So that's one of the ways to do that. It's keeping it kind of lighter and more interesting, but still do the basics, still go up front. Send your invoices promptly. Did some business with a contractor, and it was like 2 months, and I'm begging him for an invoice. I'm like, hey, dude, you haven't been paid, and the work was done 2 months ago, and you didn't even give me an invoice. How do I pay you? That happens more often than you think, where people just forget to send an invoice. So let's make sure we don't do things like that. And one of the simplest things that I've done with my clients is, can we just automate a reminder? And most of our accounting systems right now, I'm sure QuickBooks does it, Wave, FreshBooks, Zero, all these things, like we'll send a reminder at day 7 after or 14 after or whatever you set that at. Use those reminder systems because it's like a nice, friendly little push. It's a reminder of, oh yeah, I still owe that. And people will finally, go ahead and pay because they don't want to get the next reminder, right? So it kind of incentivizes folks to do that. The next thing I want to do is tell you about how much you should have, right? And later on today at 2 o'clock, I'm gonna do a full demo of this software. But I want to show you now about how this works, this financial gap things, using my software called the Clear Path to Cash. So I'm going to show you how having this type of mindset can help you put more cash in your pocket. So under the Clear Path to Cash, I teach a concept called the fast money formula. And again, this is all about the financial gap. And where I say a service company is different, well, an inventory-based company or a service-based company, right? So it's kind of two different calculations that you can look at. But basically what we're talking about is the difference between money in and money out. So money coming in, right? That's the amount of time that it sits on the shelf, inventory does. This is how long I'm waiting to pay. This is how long it takes me to pay. And this is the difference between all that, right? The financial gap. Now, people will say, well, I have working capital. Remember, my working capital is supposed to cover the financial gap. So in this case, the working capital is $630,000. And that seems like a lot, right? If I saw that and you told me I had, working capital of 630, I'm like, oh yeah, that seems pretty good. But why does it feel like I don't have any money? Well, it's because I need $1 million. And this is the calculations that's missing from most of our tool set, right? Is how do I figure out how much the company needs? Well, that's the calculation I teach you in the course. But so you have this, you need that. And what this tells you is that you can see that we're short, right? We'll say we're short $300,000 there. And this is the levers that you have to pull, right? I can have less inventory or more inventory. I can have collect faster or collect slower. You can do what if type scenarios. Well, the one we're talking about today is accounts receivable. But let's just say I reduce some of the inventory. You see how those numbers change, right? And if I'm up here, the actual chart changes as well, right? So I can show my client what happens to cash just by moving these levers a little bit, right? So if I had less inventory, right? Say I get it down to here, maybe I carried 68 days versus 92 days, and maybe I could collect just a few days faster, right? And when it goes blue, if I can collect in 32 days and not 37 days, I could solve my cash flow problem. This helps you set a plan for your client on what you should do next, right? We're going to reduce inventory and we're going to try to collect 5 days faster. Now, my clients will say, well, I don't know how much 68 days worth of inventory is, or I don't know what 32 days worth of AR is. Well, that's where I have this balance sheet goal. So where I tell my clients is, I know you don't know how to use the balance sheet. This is one way I want you to use it. When you look at the balance sheet and your inventory gets over $1 million, I want you to run the inventory back down, or you're going to work yourself back into a cash flow problem. When your AR gets over $740,000, I want you to start making some phone calls and get it back down, right? Because that's where it needs to be. Now I have a goal that I can set for the client to help them solve cash flow problems. So this is one of the ways I do it. And of course, you can also use a line of credit. That's what this is for, is like, if I have a line of credit, how do I use the line of credit to solve it? But the thing I'm trying to teach today is using these numbers, how much is on the balance sheet, to be able to get them to the perfect spot, right? The one place where their business runs smooth, where it doesn't, where you don't run out of money. So the other thing I like to do inside this app, right, is that once I get a plan, remember I said we're going to reduce inventory and we're going to collect a little faster. I create an action plan for my client, right? I come down here and I just write it out. Move this. I'll say we're going to reduce inventory, and expected result is I think it was about 300,000 we're going to do it. So put 300K in cash. How? You're like, oh, well, how does that put 300K in cash? Well, the reason why it works is that A, we're going to get the money from the sale, but B, I'm not going to take money out to replace it because we're running the level down. And we're going to start that today. So 3/14/2025. And what category is it in? It's probably not that. That's probably it, right? Profitability enhancement. There you go. And I just add the action. So when I do that, it starts to create the action log, and it helps me understand and create a big log for my clients to where they can see things as it's happening and I can track their progress, because this will connect back to the results of the program itself. So that's how I'm helping my clients, is showing them what the action is to take, short, bite-sized, consumable chunks of information that are quick to do and quick to win. So let me go back to the ending here and open it up for some questions. Oops, wrong one. There we go. So if you don't know anything about me and this is the first time you've heard it, make sure you go to my website, cashflowmike.com. I do have a book that is for free. It's called The 7-Minute Conversation: How to Analyze Any Business in 7 Minutes or Less. There's a section on here on expense control, right? Of actually how to determine how much to cut in expenses. So go get a free copy of that. I have a Facebook group where I do lots of different things, right? I give free resources. I do lives. I do articles, those type of things that I give out to folks. I also have a YouTube channel, just Cashflow Mike. You can see that. I'm starting to do a lot more videos, short things, 1 minute or 15 to 20 minutes, just like this is, to be able to give you more information. I do have a podcast. Every Thursday we record. I'm in 182 episodes, right? We're in season 5. So go check that out. It's called Mike and Blaine, Business, Beer, and BS. And of course, if you want to know anything about what I do, how to get the software, how to get the course, contact me at mike@cashflowmike.com. Any questions, comments, concerns, moans, groans, gripes, complaints, otherwise? All right, how we do on time? Look at that. I even give you some of your time back today. Sometimes I go 32 minutes, sometimes I go 27. Hey, we're right in there. I always want to give you 30 some minutes, but I will open up to questions, anybody. Did we all get the handouts, right? With some ideas on how to collect a little faster. Anything from you all? All right. Sounds good to me. So, hey, I appreciate you. We'll see you next month. I think we're going to talk about a different thing. I've got 12 of these lined up for you all year long, different topics every month. We'll see you next month. Same bat channel, same bat time. And we'll talk to you soon.